Hi dear friends, today is Friday, September 26. Let's discuss how the euro and the pound sterling are moving against the US dollar and try to devise trading plans. The euro and the British pound didn't assert their strength against the greenback for long. The pound sank by more than 100 pips versus the US dollar. The yen also weakened. To sum up, all risky assets are losing ground against the US dollar. In the first half of the day, the euro stayed afloat thanks to economic data from the Eurozone. Private sector lending was higher than expected. The most important data came from the US. Initial unemployment claims went down last week. Besides, the US GDP grew notably in the second quarter. The figure was revised from 3.3% to 3.8%. So traders rushed to buy the US dollar and sell the euro and other risky assets. Fed policymakers made their remarks yesterday. Some of them said that low inflation gives the central bank leverage to opt for active rate cuts. Others said that the fight against inflation was not over yet and advocated for a flexible approach. They believe the Fed should not hurry up to soften monetary policy, especially after decent economic data. What is obvious is that the US dollar responded adequately and could retain its strength today. A lot will depend on macroeconomic data. Let's talk about it now. Nothing serious is released in the EU in the first half of the day. ECB President Christine Lagarde is going to make her comments, but she will hardly influence market sentiment. The ECB stance is clear. Inflation is low. Hence, the regulator should take a wait-and-see approach. They are going to evaluate the effect of Trump's tariffs on the Eurozone economy. Another thing to watch is the dynamic of energy prices. These factors don't allow the EU economy to gather steam. Later, the report of major importance is the PCE price index, viewed as the Fed's preferred gauge of inflation. Since March this year, the index has been growing. It rose by 0.2% in May and increased by 0.3% in June and July. The index is expected to ink down to 0.2%. Again in August. If so, traders will have fewer reasons to buy the US dollar because the Fed will have an argument to lower interest rates. In case of inflation acceleration, the US dollar will grow even more. Thus, we will see new week lows updated in the euro dollar and the pound dollar pairs. The market will go through large sell-offs of risky assets. Some more reports are also worthy of attention, such as personal spending and income and consumer sentiment by the University of Michigan. Good figures will serve as an argument to buy the US dollar. Now I suggest discussing the technical picture. On the 1-hour EUR USD chart, a false breakout at 1.1650 will justify long positions aiming in recovery to 1.1706. If this level is tested, the toll will be open to 1752, where I will plan to short positions during a bounce, bearing in mind a drop of 30-35 pips. Short positions will be relevant at 1.1706 in case of strong US economic data. The price could plunge to 1650. If broken, lower targets could be 1611 and 1576, where I consider long positions during a dip. I could earn 25-30 pips. Long positions could be opened at 1.1611 or 1650 in the bear market on the condition of a false breakout. The British pound suggests the same trading plan. We should sell higher at 33.80. As there is no economic data for the UK today, the instrument might touch this level before the US reports. So, a false breakout at 34.19 could be the reason to open short positions. The main target for the bears will be 1.3326. The breakout of this area will push the instrument to 32.82 and 32.51. Then I will consider long positions during a dip, projecting a rise of 25-30 pips. Long positions are possible against the trend at 32.82 and 1.3326 on the condition of a false breakout. Good luck and have a nice weekend.